is sufficient to maintain your lifestyle. So if you say yes once more, that's great for you. But if you want more, I advise you to keep watching before we begin. If you enjoy this kind of content, click the like button, subscribe, and enable notifications to stay informed about everything that happens with by 2026, the price of Tesla's stock might soar to an astounding $1,000 per share, according to a groundbreaking analysis, abandoning its present worth. Even a tiny portion of this enormous opportunity in autonomous driving might reach trillions of dollars, according to Tesla News, which is around $200 behind the prediction for the next 5 years. How much would you be willing to bet on this automotive powerhouse if you were to invest in Tesla shares at this time? The market would have a big impact, putting Tesla as the front runner. With more revolutionary advancements in the works, Tesla has emerged as a leader in the electric vehicle sector, fostering unrivaled innovation. With these lofty objectives, the firm not only seeks to produce outstanding products, but also works to keep them as affordable as possible. According to sales, Tesla looks poised to overtake all other automakers as the biggest in the world in 2026 or 2027. It could be wise for investors to change their overall investment rating to a more bullish bond given Tesla's present values and prospects. Let's examine why. Greetings to all. Welcome back to Tesla Tomorrow and the rapidly growing EV industry. Even though several competitors have entered the market, Tesla has been able to maintain a significant market share. Tesla has maintained its position over time, and unlike some of its competitors that face financial difficulties, its supremacy is probably only going to increase as the sector grows. Since Tesla has established itself as a very profitable company, its stock is a desirable long-term investment. Tesla has completely changed what it means to be a manufacturer. Beyond making electric cars more widely known, the company has transformed its sales strategy by eschewing traditional dealerships and choosing a direct-to-consumer strategy. In addition, Tesla has rejected traditional advertising in favor of obtaining media attention and utilizing the power of word-of-mouth marketing. These audacious bets have richly paid off, and Tesla's premium brand image has helped it reach new heights, according to industry experts. Tesla continuously creates significant consumer demand while cutting costs that legacy automakers take for granted. The average price target for Tesla stock over the next 12 months is around $218.95 per share, though some forecasts soar as high as $430.33. Let's look at the financial aspect of things. In North America, the average monthly expenses per person, including various extraneous costs like travel and medical care, come to about $3,000. This amount roughly equals $5,000 every month, or $660,000 annually. As a result, you would require about $2 million now to live comfortably for the next 33 years. What does this signify? The Tesla retirement catalyst and possible tests to share, and given Tesla's current price, it appears likely that this company will be a wise investment in the years to come. Investors should monitor two possible catalysts that could have a significant impact on Tesla in the near future, as it is anticipated to continue on its upward trajectory for a number of reasons. First off, impressive delivery numbers show a strong indication of higher than anticipated vehicle demand, and Tesla's profitability at the gross margin level is above expectations. These positive developments bode well for the company's financial outlook in the long run. And in the medium term, one of the main factors supporting Tesla's positive outlook is the potential for a rapid increase in the rate of electric vehicle penetration, which is currently expected to range from the mid. Tesla's financial outlook is between 40 and 50%. According to a study by Needham and businesses, automakers might be aiming for far greater numbers. So by 2030 or 2035, the majority of manufacturers want to have 100% of their sales be EV weighted, according to the report. This suggests that analysts may be unduly conservative in their projections, allowing for favorable shocks that would later favor Tesla as the market. Future growth for Tesla is not exclusively dependent on rising car sales. And over the years, the firm has seen notable revenue growth from its services and other businesses, and there is still plenty of opportunity for growth, for instance. Tesla's rapidly increasing revenue has a lot of promise. Taking these considerations into account, a study paper by Goldman Sachs indicates that the additional revenue possibility might range from $1 to $3 billion within a few years if Tesla opens up its supercharger network to all EV drivers. It is anticipated that Tesla's profits per share, EPS, or bottom line, will increase quickly in the future, maybe surpassing its revenue growth. Operational leverage and the possibility of capital return to shareholders are the main drivers of this optimistic forecast. The potential of Tesla to gain from successful operations in 2022, leverage is seen in the third quarter. Despite only a 2.3% increase in operating expenses relative to the company's noteworthy 55.9% revenue increase, Tesla demonstrated its capacity to enhance profit, which is an example of how positive operating leverage indicates. Additionally, share repurchases can help the business's future EPS growth. During Tesla's Q3 2022 earnings call, the company highlighted the ability to repurchase $5 to $10 billion even in the event of a negative outcome. Tesla has been causing a stir in the U.S. market after selling 491,000 cars there. Tesla just surpassed BMW, which had been the market leader for the previous 3 years, to take the top spot in luxury sales in the U.S. However, BMW only sold eight cars in the U.S. in 2022, dropping them to second place. With 2,86764 vehicles sold, Mercedes-Benz ranked third, followed by Lexus with 2,58704 vehicles delivered in 2022. Looking ahead, Tesla not only surpasses these well-known brands, but also becomes the first American car maker to lead the list in 25 years. Tesla is anticipated to generate $69 billion in revenue in 2023, which will further boost its unit sales in the U.S. Additionally, the business is expected to sustain a 3.97% yearly growth rate, which would translate into a predicted market size of $19 billion by 2027. Morgan Stanley analysts consider Tesla's stock's current upward trend to be a desirable investment position. The company had earlier changed its price target from $330 per share to $250 in order to account for a potential future situation in which Tesla would find it difficult to meet anticipated demand for EVs, as well as a recent development. Adam Jones of MorganStanley.com wrote, Adam Jones of Morgan Stanley and Morgan Stanley Board of Directors wrote all-time high in his blog post for earlier this year. Despite the fierce competition in the EV market, Jones thinks Tesla has a chance to succeed because it is a self-funded company with established scale and efficiency. Tesla and other supply chains stand a decent chance of winning the market. Given its incredible growth, which has quadrupled in only 4 years, Tesla's stock price may reach an astounding $1,000 a share by 2027, if the business keeps up its current pace of expansion. Although it may seem unthinkable for Tesla to overrun such an industry, a Morgan Stanley analyst made a bold projection back in 2022 that the company's revenue would approach $300 billion and surpass the combined revenue of both Ford and General Motors within 5 years. The giants? By 2027, Morgan Stanley predicts that Tesla's revenue would exceed the combined revenue of the two businesses. By 2030, the analysts predict that Ford's market share may drop from 12.5% to almost 10%, while GM's unit shares may drop from 14.6% to less than 12%. They also predict that Tesla's competitors may see a decline in marginal growth shares, which Tesla itself would absorb. In conclusion, by the end of the decade, Tesla's wallet share may rise to 23%. With a predicted revenue of $300 billion, Morgan Stanley predicts that Tesla would surpass both Ford and GM's combined market share by 2030 and surpass GM's share of new car sales revenue by late 2026. While acknowledging that Ford and GM can continue to be relevant in the EV ecosystem by reducing their operations and profitability, Morgan Stanley warns of potential risks for these established automakers, including increased labor and material costs and the implementation of scaling for future EV model launches. Despite Tesla's stock recent poor performance, in the long run, the outlook is still optimistic, with Tesla's predicted compound annual growth rate for key financial indicators indicating that it will continue to develop rapidly over the next 5 years. Additionally, following a spike in the stock price earlier this year, Tesla's valuations have become more reasonable. Although investors may be worried about the state of the market, Tesla's ability to maintain profitable vehicle sales in a difficult economic climate, the general consensus is that Tesla will continue to grow quickly. This belief is further supported by the anticipated compound annual growth rate for its top-line revenue, net profit, and free cash flow. So the question of how do you welcome your favorite new lover? Retirement decision. Please share your opinions below, along with your value of Tesla. If you want to stay up to date on the newest developments about Tesla, be sure to click on the next video that appears on your screen. I hope to see you there.